It has been long bemoaned that the UK is up for sale, due to a significant number of large multinational companies which generate significant profits and free cash flow, but which trade at a discount to their international peers, and lax UK rules on takeovers. British companies are seen as easy targets for international competitors and private equity operators. The number of companies listed on the London Stock Exchange has fallen by almost 50% since 1997, with iconic British brands including Aston Martin, Bentley, Land Rover, Mini, Cadbury's, Thorntons, Hotel Chocolate, Sky TV, and Formula One, all sold to foreign buyers. Even the UK National Lottery is now owned by the Canadians. Lesser well-known companies and infrastructure operators have also been sold: Heathrow Airport, the water companies, the train companies, supermarkets Asda and Morrisons, and even food retailers Pizza Express, Wagamama, and Zizi. Even private companies are being sold at a rapid rate, a notable example being Google's purchase of DeepMind, the AI pioneer, at a very attractive price. This trend continues today, where iconic British soft drinks maker Britvic has received a takeover approach from Dutch brewer Carlsberg. We'll take a look at the details of this deal and how an investor could profit. I hope you find this analysis useful, and if you do, I would be very grateful if you would take over the like button and subscribe for more videos. Britvic was founded in 1938 to produce a range of vitamin-dense fruit juices. Over the next 86 years, the company grew organically and by acquisition, with brands now including White's Lemonade, Tango, Robinson's Cordial, Iron Brew Tizer, and is also the franchisee for Pepsi and 7-Up in the UK. The company boasts sales of £1.7 billion, profits of £157 million, and free cash flow of £160 million a year. Britvic is worth in excess of £3.1 billion on the stock market. Carlsberg, the Dutch brewer founded in 1847, first approached Britvic in June 2024, but its first two offers were rebuffed. Then, on the 8th of July, Carlsberg announced it had agreed to take over Britvic for £12.90 per share, or a total of £3.3 billion. In addition to the cash payment of £12.90 per share, Carlsberg will also ensure the payment of a final dividend payment of 25p per share, resulting in a final payout of £13.15 per share. So, the exam question today is, how much could an investor earn from the sale of UK POC? An investor could participate in this takeover by buying a share in Britvic at the spot price of £12.73, holding until the close, and receiving a cash payment of £13.15. Such an investor can expect to generate a return of 3.28%, which translates to an annual return of 11.19%. However, due to the significant downside price should the deal fail to close, the risk-adjusted return is a meager 0.6%, and the expected loss, should it not close, is 31.2%. In addition to these rather disappointing returns numbers, it was announced on Tuesday that the UK regulator, the Competition and Markets Authority, is investigating the proposed acquisition to identify if the combination will result in a reduction of competition within the drinks market. If we rerun the returns calculations and reduce the probability of the deal closing to 75%, we can see that, whilst the expected and annual returns profiles remain the same, the risk-adjusted return falls to negative 18.22%. Certainly not an optimal outcome for investors. So, whilst it may be profitable for private equity and foreign companies to buy iconic British brands, the same doesn't seem to be true for individual investors, certainly not in this case anyway. If you are interested in the takeover of British companies by private equity operators, I have put a link in the description below to a Bloomberg analysis, which is very insightful. What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.